Luke, thank you so much for speaking to us. Before we get to the MPC, just your thoughts on where the market is at the moment. I mentioned earlier that it has been relatively a volatile quarter so far, and more of the same. If you look at what happened last week, we're starting the week relatively unchanged in terms of where the NSE L-share index is at. But overall, what are your thoughts on where the market is at and where it's headed from here?
Thank you very much. Thank you for having me today. So looking at the equity markets, year to date, the market has lost about 5%. Lately, we've been seeing more of mixed trading. The market closes up today, the next day it closes down. So the volatility in the market is still there, especially for investors that are looking at short-term play. And we'll continue to see that. Then in terms of what we expect overall for the equity market, we think the market will continue to trade downwards, largely due to the impact of COVID-19 on a number of companies. We saw what consumer goods companies did in the first half of the year. A number of them reported significant declines in their turnover as well as bottom line. It was even so bad for some companies like Guinness that reported losses in their interim results. And for the banking sector, the banks are not left out. We saw declines in interest income as well as non-interest income. So this downward trend we are seeing in the performance of companies listed on the NSE is actually affecting market sentiments, and we think that will continue to be the trend going forward. However, for investors that are looking at the long-term play, this is actually a good time to come into the market, given that a number of these stocks are trading at very low levels. For instance, Access Bank is trading at 45% below what it was before COVID-19. So these stocks are actually offering very attractive opportunities for investors that are interested in the long term.
All right, let's move away from the stock market for a while and talk about the MPC. What are your expectations as that meeting wraps up tomorrow? Many will say that there's a lot of liquidity in the market, but clearly it's unlikely that the authorities are going to tighten further given the slow growth we're seeing in the economy.
Yes, I agree with you completely. Given the state of things, we expect the MPC to leave rates unchanged. Of course, we've been seeing the uptrend in inflation, mainly due to the hike in power tariffs, as well as the partial deregulation of the downstream sector. We've seen this impacting prices across board. Inflation, according to the last data released by the National Bureau of Statistics, headline inflation rose to 13.22%. That's a record high. That's the highest we've seen in 29 months. But do we think that will lead to rate tightening at the next MPC meeting? We do not think so, because at the moment, the MPC is more is growth biased. So we expect them to keep rates unchanged at the moment in order to spur lending activities, so that companies that are still battling with the impact of COVID-19 can have access to cheaper debts to finance their operations. At the same time, we do not expect them to cut rates just because they are growth, and that's mainly due to the fact that we've been seeing like a sustained uptrend in inflation. So you don't want to worsen this uptrend we are seeing in inflation. So on that basis, we do not expect them to cut rate as well. So rather, we expect the MPC to leave rate unchanged.
Right. What about the foreign exchange policy? Do you see any tweaks there? Because there was a time, I'll say maybe about a month or two ago, where people were extremely concerned about where the Naira dollar rate was headed. We've seen some stability over the last few weeks, but I think there are still some concerns about the central bank's ability and capacity to continue to support that market as we see more and more foreign investors sit on the sidelines in terms of bringing their cash here. So do you anticipate any messaging around the forex policy?
So as regards FX, there are still a number of factors affecting the CBN's ability to ensure that there is adequate supply of FX in the country. So one of these factors is the movement in oil prices. Of course, we've seen like significant improvements in oil prices compared to what they were doing in the months of April and May. But nonetheless, compared to pre-COVID-19 levels, oil prices are still way below what they were doing then. currently at Brent price, for instance, is currently at $43 per barrel. That's significantly below $65 per barrel that it was before COVID-19. So this drop in oil prices is affecting foreign earnings. At the same time, it's affecting foreign reserves, and that's limiting the ability of the CBN, the MPC in general, to ensure adequate supply of FX in the country. On the other hand, we have foreign portfolio investors who are actually interested in exiting the Nigerian economy at the moment. A number of them have not really met their FX demands, so they are still stranded in the country. And due to this issue, other potential foreign investors are not interested in bringing their money into the country at the moment. So that's also a downward pressure on the naira. So we expect to see further pressure on the naira going forward. However, the big question is: do we expect the CBN to devalue the naira further in the next 10 to 12 months? We do not think so. But we might continue to see slight depreciations in the naira going forward due to pressures from foreign investors that are planning to exit the country, as well as low oil prices that are affecting foreign reserves. Thank you.